Okay, next one. Now, first thing first, right? Why is this jumping? Now, price came to our level, and this was the point, our monitored level, right? Came here, move up, bump. So I allow 3 waves, 1, 2, 3. But these waves must have gaps in between. You see the gaps over here, okay? The gaps over here, the gaps over here. This gaps show that there is a lot of bullish momentum inside these trades, okay? Without these gaps, I'm not interested. So the gaps can appear here or the second wave up, okay? The first, either the first movement or both, or just the third movement. I do allow one thing here as well, okay? And so look for this. It was filled at 50 and then hit our target at 100 and then even went to 2 to 1. That means I risk $1, I make $2 for this particular trade. Now, I see a question coming in. It says that what are checkout price action? Now, whenever I say checkout price action, usually I will say, usually for traders, right, they usually trade on the 1 hour chart and they look for candlestick patterns, which I will give you all a link to go and study candlestick patterns. But of late, I have been experimenting with a special 5-minute entry. So whenever I say anything, let's say check out price action, and then if price is going up and I said check out price action over here, what could happen is that it's reversing. So it depends where I give you the price action. Is that if I give you at the top, that means, and price is down here, what you want to do, look for the sells, but only on the M5, okay? And then sometimes I'll say look for bullish, check out bullish price action, or sometimes I say bearish price action. Now, bull means I'm looking for buys, bears, I'm looking for sells. Okay, so that will also mean the same thing. But when you see these words bullish or bearish, you can also use the 1 hour candlestick patterns. But at the same time, you can also use the 5-minute chart. Now, if I say bullish and it goes up and really flies, because on the hourly chart, I do already expect it to go up, right? 5 minutes, we are not talking like this one checkout. Probably you make like 1 to 1, 2 to 1, or maybe 3 to 1, and maximum I've seen like 5 to 1. All right. But when I say look for bullish and bearish price action, I have also trades that go 10 to 1. That means you risk $1, you make 10. That's the difference. Okay. So hopefully you can understand what I mean. Now, based on how to study these entries, like I mentioned, during the days, the end of the year, when I'm a bit free after from all the traveling from work, what I'll do is that I will get I'll just say, hey guys, these are the dates I'll be doing the entries on the M5. You can ask questions, come in, listen to it, and I'll put it on video, and then you can review it again. Okay, so hopefully that answers your question, Suyin. Next one. This is the dollar yen. Came down. Very clean, impulsive. This is just only one wave. One nice wave here. Came back to the 50% mark. This is usually where I enter, right? And then down. Okay, this one gave you a 1-to-1. Then after that, it went up already after that. But still, at least there's a 1-to-1. It's fine, right? So you can always, plan out the kind of thing is that usually when I say check out, you can always do a 1-to-1. And believe you me, even with 1-to-1, yeah, you can create miracles right there. Later I'll show you. Now, there's also this particular trade here on the gold. Now, this is a losing trade. Okay, you can see price moving up, breaking the swing, and then came to the 50% here, and then came much lower, touching the 23.6. Now, this usually where the alarm bells will ring for me. If it goes to 23.6, it's usually not a good thing. But if immediately from 23.6, it flies up, then there is a possibility that, okay, it can go to 100, but for this case, it goes down. So do remember, we do have losses, but if you've been following the things that we've been doing, you have more wins than losses, okay? So those are the 3 trades that happened last week. Okay, so